Right traders, welcome back. So in this video, I'm going to be going over how you can use order flow to determine your daily bias. So if you mess up your daily bias or you're not sure how to start a session, I can teach you the 3-step model I use every single day to perfect my daily bias. The whole system comes down to knowing where to trade from, what to look for, and why you are looking for it. So the first thing we need to understand where we are in terms of market structure. So this is the S&P 500 or the ES futures, right? 15-minute chart. Now, I always encourage every trader to focus on market structure. Now, what I mean by market structure is that, we're very simple. We have a structure high, structure low, structure high, low, high, and low. And so by having market structure well defined, it gives you the vehicle to the market. So I call this the domino effect. Now, the reason I call this the domino effect is because we have a structural high and low down here. This is the dealing range. So market structure leads nicely onto dealing range. And so the dealing range is simply the most recent high down to the most recent low, right? Recent high down to the most recent low. Now, once you have this established, after this, we understand anything above the 50% level here. So this is the 50%. It is the midpoint of this high and this low, the most recent structural high and the most recent structural low. So anything above that becomes a premium. Anything below becomes a discount. And so we use market structure, our dealing ranges, and then premium and discount to determine our key levels. So if you're struggling with daily bias, it's because you don't actually have your key levels well defined. So in this video, I'm going to be going over how you can find your key levels and validate whether they are actual key levels. So if you know where to trade from, the what and the why become a lot more simpler, and you can hence reduce the amount of losses you take by simply having a daily bias in check. So by doing this, what I'm going to do now is I'm going to just be going over the concept of a flip zone, right? So I'm going to be breaking this down to traders in terms of the order flow, right? So the order flow is super, super important, right? So I'm now coming to a level that I actually took a trade from on the 2nd of October. You can go back and look at the price action over here. But if we go to the ATAS footprint charts, right? What we can see, this level, right? We don't even have data on it, right? But this level held as a strong area of supply, right? The reason why is because there were passive sellers sitting in this region, right? Let me put that in a different color. There were passive sellers sitting over here. So this means that this is an area of supply. Now, throughout the whole of August, right? And you can do this as a fun activity if you are interested in order flow. But what you will see is that you will see the market held as supply. Then we see the market held as demand. Then we see the market holding as demand, right? So we can see that this is indeed a key level in the market. Now, throughout October, this key level, so on ES between 67.62 and 67.58, this one key level was responsible for so much of the action and so much of the best probability trades, right? Let me explain what I mean by that. So if we just continue to look to the left, we see the market holding as demand, right? Holding as demand. And then we, of course, had the Trump tariff tweets that gave us a strong move to the downside. Now, this is what we call a simple shift from demand. So I'll just write D to supply. This is what we call a flip zone from demand to supply. Now, once we have this in place, what you need to understand is that we simply want to be extending these zones all the way to the right. And I will show you the power of this. So we had another extreme sell-off over here. So this was Wednesday, the 15th of October. So this was the week after we had the tariff trumps, right? So what was important to understand, right? If I just clear up the charts, the tariff tweets, right? We don't want to be timing news events. We want to be using news events in line with our key levels. Now, key levels are very important. I'm going to be breaking down how you find a key level. So what we can see here is we can see price held as demand and price shifted to supply. So what we can see, just like clockwork, right? It's very important to understand our next sell-off came from this same exact zone. So this is where we use ICT with order flow. So if you're used to trading ICT or smart money concepts, I want you to keep that knowledge and apply order flow to the basic concepts, right? So what we see here is we see a 15-minute fair value gap, right? This zone right from the start was derived from a 15-minute fair value gap. And so a 15-minute fair value gap is what we see over here. So I always use a 15-minute chart, right? I'm very interested in using the 15-minute chart. And I want to see the interaction between buyers and sellers at this zone, right? So I'm going to be breaking down exactly what that means. But just for now, what I want you to understand is the cyclical nature of the market and how important it is to have your key levels well defined. So this was an area of supply from the 10th, right? And we can see the market holding on the 15th, right? So we see this area of supply. So I'm going to prove to you why this is an area of supply, right? So let's see what's going on. Again, we don't have data on that, right? So you're going to have to take my word for it at this point. This was an area of supply, right? We can see that just by the way the market was moving, right? So once you have your key levels defined, you want to only trade at those key levels. Now, what's also important to understand, it's not a coincidence that the market sold off here when we were significantly above the 50% area, which is all the way down here. Right, and it's not a coincidence we bounced off this level because this was in the discount, this was in the premium. So we're using PD arrays or simple, I guess, premium and discount smart money concepts, but we're only validating our trades with order flow. We're only validating our levels with order flow. And so what I mean by that, if we go to the ATAS platform, is this, right? What we can see here is we saw the sell-off. So from this zone all the way down to this zone. So on Friday the 17th, we had a market rally higher. Now, the reason we had a market rally higher, if we just kind of dive into what these candles were showing, right? This is where the order flow becomes real. What we can see here, right? We see this level, and what we can see is we can see a ton of aggressive sellers inside of here, right? 15 for 0, right? 174 for 61. What does that mean to you? So if you're a trader and you're looking at the footprint charts on a particular fair value gap, a breaker block, an order block, no matter how you trade, even if it's an EMA crossover, even if it's a Bollinger Band, right? No matter what indicator or no matter what ICT concept you are using, you need to have order flow to back up whether your thesis is correct. So what I mean by that is when you see 174 for 61, there's a ton of aggressive sellers, right? But the market rallied higher. So it shows you an absorption of sellers, right? If you're looking to trade off a level, you need to know whether it's an area of supply and demand. You need to know whether buyers are in control, whether sellers are in control. And so this is what I'm showing you over here. So in this case, we see a lot of negative delta inside of the zone. I'm not interested in what's happening outside the zone. I'm interested in this zone, right? I see negative delta and the market pushes higher. So it shows me buyers are in control. This is an area of demand. Just like over here, right? Friday, this was now 4:30 Eastern. We see the same thing, right? 45 for 0 finished auction. A ton of aggressive sellers over here. Some buyers peep in and we managed to keep this level. We hold this level. So this shows me we're at an area of demand, right? Very simple. Buyers are in control and then we rally higher. So now what's important to understand, what's interesting to understand is PD arrays and regular ICT concepts and fair value gaps. They work hand in hand with order flow. So what I mean by that specifically is I want to draw traders' attention to this level over here, right? This level in October was very key. So this was now 67.62 down to about 67.58, 59. Very, very important level. But what's interesting to understand, if I take you back to the trading view chart, was this level was derived all the way from the 2nd of October, right? Wednesday, Thursday, 2nd of October. So once we have this in place, what I want traders to understand is your job is to do this, right? Your job as a trader is to simply do this, right? Once you have your level from the 2nd of October, you're just constantly dragging it over to the right, right? You're constantly dragging it over to the right. Now, I'm going to show you how this links into the daily bias, right? Because I get a lot of questions about how do I form a daily bias and how do I make sure I'm on the right side of the market? The way you determine whether you're on the right side of the market is by understanding where your key levels are, right? So this was a key level that held on the 15th of October. It was a very strong key level, and that's why we held to the downside, right? Again, the ATAS platform indicates to us, right? So we had a huge sell-off from this region. So on Monday, the 20th of October, we saw the markets rallying back up into this level. So your entire daily your entire daily bias, or your I guess bias for the day, your session bias, whatever you want to call it, whether you take longs or shorts will ultimately come down to how price is reacting at key levels. So this is why I constantly bang on about these key levels. Right, so daily bias tip 1. Now that price comes into your key level, right? So this is now Monday, the 20th of October. I didn't take a trade on this day, but I'm going to be breaking it down candle by candle, what I'm looking for as the market opens, right? So we're going to go down to the 1 minute chart. So bearing in mind, when I come to the charts, I already know where I want to be trading from because I have defined my key level over here, right? So this key level in October was extremely important. Just from a 15-minute perspective, right? You can go back to the order flow. I took a short from here. Now you can go back to the order flow and see this was an area of supply. So sellers were in control at this region. So think about it logically, right? Price will always gravitate to where the key levels are, right? Where are buyers and sellers sitting, and how can you take advantage of what the market's showing you, right? The market has already showed you there were sellers sitting over here, there were sellers sitting over here. So how I approach the chart is I wait for price to come to this level. So if I continue just to play price on a little bit, what we can see here, a couple of tips to understand, right? So now we've tapped into this level, right? So we tap into this level at around whatever time that is, right? This is now 25 past 10 EST, right? Or 20 or 15:25 in the UK. So we have a bullish market open, right? So 9:30 Eastern, I had to wait almost an hour, 55 minutes just to wait for price to come to my level. So this is step number 1, right? When I see traders trade, they have no idea about, they don't do any of their pre-market analysis. So you need to know the basics, right? You need to know your market structure. That's step 1. We went through that. You need to know market structure. You need to know your dealing range, right? You need to know where the most recent high and low is. Once you've established that, you need to ask yourself, are you in premium or are you in discount? Your PD arrays, right? And last but not least, right, key levels are defined from fair value gaps. So once I chose a 15-minute fair value gap, I simply wait for price to come to that level. So if you struggle to find a daily bias, or you FOMO, or you have hesitation, or you overtrade, this is a very simple way to fix that, I promise you. It takes time outside of the markets to plan, to understand what you're looking for, and to simply execute at the right levels. But if you can determine the right levels with order flow, which is what I'm about to show you, you can begin to drop some of those psychological issues that have held you back. Now, with that being said, here's one tip. You had to wait an hour. You had to go through a range that lasted from about 30, let's call it 9:45 all the way to 10:15, right? Half an hour range. Once you have your levels, wait for your levels, right? This is a well-defined level. It's not a coincidence that all the trades come from 1 or 2 levels a week, right? The market will gravitate to these levels. It's your job to understand where they are, right? So I'm going to be breaking this down. So all we look for in this case, and I'm going to be breaking this down again, we look for a break and retest, right? Trading is all about basically catching a break and retest. It doesn't matter what strategy you have. There's different ways to interpret this. There's different ways to analyze this. But the truth is, every single strategy in the world comes down to a break and retest. Now think about it logically. This level, like I explained from earlier on in the month, held as supply. So on the 1 minute chart, when we come back into this level, if we break above this level, right, like we did here, it shows us that those previous sellers are struggling. So what I do is I draw a red line like this, right? I draw this red line for a reason. So I'm looking for a break and I'm looking for a retest. Now this is very important. I am only going to enter long once we get past this red line. The reason for that is because yes, I want to see a break, but I also want to see what's going on over here, what's going on over here. Now, the way that key levels work is that either buyers can be in control or sellers can be in control, and there's no third option. So if we break above a supply level, this shows us intrinsically, we should understand just from a common sense perspective that sellers are failing or they're beginning to fail, because if this level was successful, we wouldn't have broken above it. Now, the retest is where the money is, right? The retest, what you want to look for is you want to look for aggressive sellers to fail. So you're looking for that negative delta with no reward. So this is what I'm going to be breaking down again. So if we just go to the 5 minute chart, if it lets me go back that far, no, it hasn't. We'll just stick to a 15. So if we just take a look at this level on the 15 minute chart over here, here we go. Right, we're going to be looking at this level in a bit more detail. We're going to be understanding what was going on. So specifically, this is the 15-minute chart, right? But if we just take a look at what was going on, this wick, this 15-minute wick represents the retest you see over here. So if I just make this screen a bit smaller, this is again the ATAS platform. I recommend everyone at least know about order flow. You can trade it on TradingView as well. But once you have the order flow like this, right, what you can see, right, this is what's interesting. This rejection here, this is the 1-minute chart, right? This rejection is, look at this, right? Look at all that negative delta. Now, you don't need to be an order flow expert to understand this. You don't need to be a trading wizard to understand this. I don't care what strategy you use, you need to have a basic understanding of this. So what we can see here, inside of the zone. Now, I get questions about, does it matter whether the zero is at the top or the bottom of the candle? Does it matter if the candle breaks above or below? It doesn't matter what the candle is doing, right? Because the candle, we don't care what the candle looks like, right? We don't care what pattern is formed. We don't care about any market structure shifts or liquidity sweeps or anything like this, right? What we are interested in is understanding where our key levels are, and we want to see how buyers and sellers are interacting inside of the level, not inside a particular candle. So we can see this gray box and this blue box, they're the same. So again, 67, 62 to 58. So we see a finished auction over here. So 32 for 0. Okay, that's a good start. It shows us the auction has been wiped out. That's the first thing. The second thing is we can see obviously a lot of red delta. So it means intrinsically, we all know that the left number, the bid, aggressive sellers, the right number is the ask, aggressive buyers. So when we see a lot of aggressive sellers, right, and then we continue to move up like this, right, we can see price moving higher. This to me would be an indication to go long, right? Even though I didn't take this trade, I didn't like it. No News Monday, I didn't really take this trade. I was busy on this day. But what we can see here is we can see these passive sellers from previously, they have failed. And we saw all those aggressive sellers, right? Those aggressive, I'll just write AS, right? They also failed. And so this is our long position, right? Because we see passive sellers failing and we see these aggressive sellers failing. And this is what gives us our confirmation to take longs from here. Stop loss below the zone. And as you can see, price rally to whatever it did, right? Not necessarily the cleanest of trades, but we did have our rally. Now, the thing I want traders to understand and take away from this isn't so much the trade, it's about the level, right? The level is the most important thing in my opinion. So what we can see here from the order flow ATAS platform as well, what we can see is we can see this level, aggressive sellers failed to break below the level. This shows us that buyers are in control. This is an area of demand. This is a flip zone, right? So what we had 15th of October, price held as supply. And now on Monday, the 20th, price held as demand, right? This is what we call a shift from supply to demand, right? Sellers in control to now buyers in control. Now, this becomes very important for the rest of the week. And I want every trader to kind of understand, move away from ICT and start looking at the truth behind the market, right? What's actually happening. The only ICT concept you need is the breaker. Now, let me explain what the breaker is, the correct way to use it, right? So yes, we talk about fair value gaps. Yeah, a breaker comes from a fair value gap. But the truth is what you need is buyers and sellers, right? To be in control. You need to know whether buyers and sellers are going to be in control. So here again, we have proof that this zone here rejected sellers. So this is an area of demand, right? So I'm just going to speed this on. So this was Monday. Now we had a key level up here. Price was tapped into that zone. So what's interesting now, if we just again go and study this zone as well, what we had here on Monday, we had an area of demand. We had a nice little long here, area of demand. Now from here, we see the same thing, right? The market enters this zone. It's an area of demand. But how do we know that? Specifically, how do we know that? So again, ATAS platform. If we just take a look here on the ATAS platform, what we see is we see the same pattern again, right? So we see the market holding as demand. Again, this level 66.62 to about 66.58. Yep. About 67.60, sorry, right? We see the same thing. We see the same exact thing. In fact, even more clearer than Monday, right? So again, what we see here, let's get the two charts up next to each other, right? So here we have all this rejection over here, right? So this is the rejection that we're looking for. look at what's going on here. Now, specifically inside of that zone, right? I keep banging on about key levels because key levels are the most important thing, right? So my key levels are derived from a fair value gap, right? And they are derived from what they call the breaker. But breakers are not useful to you unless you know what's happening inside of the breaker, right? So those who trade ICT, it's great looking for market structure shifts and all this business. But if you don't know where your levels are, where buyers and sellers are sitting, it's all for nothing. So what we can see here, again, this is the level, right? Price takes out the Asian low, and then of course we rally and take out the Asian high, right? And then we tap into this level. I believe we take out we didn't take out the previous day high in the New York session. Now, I want traders to understand why this level was such a strong area of demand, right? What was going on over here? So candle by candle, right? So if you were looking to enter this market, how would you do it? Right? Candle by candle. So let's just take a look at this, right? So what we can see here is we see this ultimate rejection over here, right? I think we had a second rejection over, yeah, here we are. So this is what we call a rejection. So how you enter is entirely down to you, because if you know whether you're at an area of demand or an area of supply, you can be sloppy with any ICT model and you can still make it work because you fundamentally understand who's in control at your levels, which is very important. So if we take a look at this on the 5-minute chart, right, what we can see here is this. How I would enter on the 5-minute chart is I would specifically have a line like this, right? This is how I would do it. So now that we've tapped into the level, let's actually see what's going on inside of the level. So what we had is we had 1 tap, 2 tap, and then we had our 3rd tap before we really shot up. So this is what's super, super important. Look at this candle, right? Look at this, look at our first tap, right? 610 for 398, 318 for 143, 102 for 0, right? Significant red delta. Now I've made lots of videos on how to read the delta and what specifically the delta means, right? But the delta is simply a measure of who is more aggressive in the market. So if you look at the market, right, the market is made up of 2 orders, right? We have aggressive orders and we have limit orders, or we have market orders and limit orders. So what you see here are aggressive orders, right? Hitting the bid, the left-hand number, hitting the ask, which is the right-hand number. So the reason I want every trader to use delta footprint charts or just order flow as a whole is because you can see exactly how many market orders there are, right, for aggressive selling and aggressive buying. So what we can see here, even without reading the numbers, because people say, oh, do you read all the numbers? No, absolutely not. You want to look at delta, or specifically order flow, inside of key levels. This is why I keep talking about key levels. If you know where to trade from, your entries become way simpler. Obviously, they're not correct yet because you need to know who's in control. And that's what we're going to be breaking down. So if we just take a look at this, this was a huge area of demand, right? Buyers were definitely in control. And the reason I know that, or the reason we can confirm that together, is because of this, right? Negative delta, even down here, negative delta, right? We see 3 zeros, 102 for 0, 123 for 0, 34 for 0, and we just see the market rallying higher. So even from a zoomed out perspective, right, we can see all this negative delta, but this fair value gap, this breaker, whatever you want to call it, it held. This was an area of support. This was an area of demand, right? Buyers were in control of this region. And then of course we rallied higher, right? So this is again how you want to be looking at the charts. So what we can see here, so this level held from the 2nd of October. So 2nd of October, what we saw is we saw the markets holding in the past. So what we saw is we saw a supply area switch to demand, and now from here we have another demand zone. So notice how all the best trades are coming off one level. If you know where the buyers and sellers are actually sitting, you can take good trades, right? It's that simple, right? Traders don't put in the work to actually see where these levels are, and that's why they lose. So now let's go to Wednesday's price action, and I really want traders to understand what I'm talking about. So if we just take a look at Wednesday's price action, right? This was now Wednesday, the 22nd of October. So specifically, how I like to look at charts is I like to have my levels predefined, and I'm only interested in trading at those levels, right? So if I just wait for the Discord. Now, this is the thing. in trading, right, you're never going to be 100% accurate, but you can increase your accuracy by understanding where to trade from, right, and who's actually in control at your levels. So I'm going to be going over this trade from the 22nd that I took, right, 22nd of October. So I'm just going to rally back to that date, and we're going to be going through that. So specifically 22nd, all right, let me just, give me 1 second to scroll through this, 22nd, 24th. Now, here we go. So this is now the 23rd, and then of course we have the 22nd. So I want to just take traders back to my pre-market plan, right? So having a pre-market plan is the most important thing, the most important thing. So here we are. So this is what I was looking for. So obviously timestamp here was when 22nd of the 10 at 14. This is now 9:36 Eastern. So this was my pre-market plan, right? So my plan for the S&P looked something like this. This key level was very important. So what we had, I've marked it out here. Tuesday, we held as demand, right? The reason why, this is the proof. Aggressive sellers failed. So I know before Wednesday market open that this is an area of demand. I know that because I can see it here. So when we go back to the trading view chart, all we do is we wait for this level to be hit. It's that simple. Now, when this level gets hit, we can either break lower or we can simply hold this demand again and break higher. Now, a few things that pushed me towards having a short bias that day was the following. Again, ICT traders will understand this. We took out the Asian high. All right, we took out the Asian high. That's the first thing. The second thing is we opened bearish, right? So we had a pretty bearish open. So again, patience is the mother of all skills. So the market opened, of course, 9:30 Eastern. We didn't break this zone until almost 10:30 Eastern, right? Again, a 55-minute wait. If you can wait, if you know how to form a level and you can wait for your levels, and then you know how to execute at your levels, there's nothing stopping you from being profitable. So if you're inconsistent, it comes down, you have a problem in one of these three areas, right? You either have a problem in defining levels, if I can spell today, defining levels. You either have a problem in waiting for levels, so you don't know what you're waiting for, or you have a problem in knowing what to do at your level. So it's about knowledge of execution. I'll just write EXE, knowledge of execution. So if you find yourself FOMOing into a trade, it's because of one of these three things. You either don't know how to define your levels, you don't know what you're waiting for, and you have no knowledge of execution. This is the problem. So I'm gonna help you fix these problems over here. So I had a short bias going into the day, and the reason for that, again, we took out the Asian high. That was the first reason. So price has no reason to come higher because we've taken out major liquidity, Asian liquidity. But more importantly, this is the weekly candle, right? This is the weekly candle. So for those who don't know, the way that the weekly candle forms is we will expand higher and we will sell off when we're above this weekly opening price. So this here, WOP, this is the weekly opening price. Now, the higher we are above the weekly opening price, the more likely it is for shorts to play out. Right? That's a good thing to understand. The higher we are above the weekly opening price, the more likely it is for our shorts to play out. Now we just have to time it. So we time it using yes PO3, yes these 1 minute fair value gaps, but more importantly, it is the flip. It is this ICT breaker concept, right? Demand flips to supply. So now we're going to flip it on its head. What I described earlier on Monday, we're going to flip it on its head now. So if we break below this level, we have a significant break below this level. In fact, if we just go to look at the volume supported this move as well, right? We had a lot of aggressive sellers, right? Really breaking through this zone. If the market lets me go back that far, no, it doesn't. That's fine. So again, this level, right, on the 15 minute, this was a very, very aggressive move to the downside. So what we can see here is we can see, look at that break, boom. So that break here represents this break here, a very large break to the downside. And so this break here was supported by heavy aggressive sellers. We had volume backing our move up. And this is what we see here. We have a huge move to the downside, boom. All right, there, boom. Boom. So now I get questions about this entry trick that I use, and I'm gonna sum it up. Now, when we see our level being broken, what we want to focus on, we want to focus on that first candle that breaks below the level. And what we want to do is we want to draw a red line or any colored line underneath it, like this. So I will not trade until I have an accurate and valid retest. So I'm not going to jump in here, and I'm certainly not going to jump in here. So this trade was a perfect example of how to be patient. Now, my execution, right? My execution for this trade specifically was, sorry, I got that wrong. That was a 5-minute chart. We do the same thing here, but on the 1 minute, right? So this was the 1 minute candle here that broke. This was the execution for that day. So if we go to that day as well, I'm going to just break down my execution. Here was my execution, right? So what you can see, my execution here was at 66, whatever it is, 67.56, right? So 67.56 is this line over here. So it is the bottom of the candle that breaks below the zone, right? So this candle here broke below the zone. I just draw a line like this and I'm going to execute here, right? If that means you have to take a bit less risk to reward, then it is what it is, right? But this was the short, right? I'm not going to go over the specifics of the short. I want traders to understand the mechanics of the move, right? The mechanics of the move was super interesting. What we had is we had a flip from from demand. Let me just change that, right? So we had a flip from demand to supply. And we can see that via the footprint charts, right? The footprint charts are the lifeblood behind this, right? So the footprint charts, again, show us our confirmation. So what was going on inside of this zone now, right? So we've broken below. So those previous buyers, right, have failed. Now look at the buyers inside of here. So if we just take a look at this now, right? 1K for 2K, double the amount of aggressive buyers, right? 277 for 578, 0 for 72, finished auction, 0 for 85, ton of aggressive buyers inside of the level. Very important to understand. So if those buyers from the previous day failed as we broke below, and these aggressive buyers also failed as we continue to break below the I call it the neckline or the break line, whatever you want to call it. If we have a significant break again with all these buyers failing, right? These buyers failed over here. This shows us a true flip from previous day's demand to this day's supply. If you want to look at it from a ICT perspective, there isn't much that you can take away from this chart, right? I don't recommend any trader trades any ICT concept without understanding where the market buyers and sellers are. So here were the buyers, right? Here were the, again, buyers, passive buyers. And here were those passive buyers, which then switched to passive sellers. Now, I promise you, your daily bias will be so much easier. It'll be a lot easier to determine if you simply knew where these levels were. So let's go into Thursday's price action. So this is now Thursday, the 23rd of October. So as the here we go. So as the market opens, right? So here's the market. Let's just break this down. So if we go to the 1 minute chart now, what we can see from the previous day is that we had a huge seller which created this down movement. Now we know there was a seller here on the 22nd, right? I proved that to you here. The reason why is because we had a huge resistance area. Aggressive buyers were hitting the ask, right? We had positive delta, 280, 0 for 285, right? This is the number that gave it away. 0 for 285, 8.15 for 1K, and then we had 1K for 2K. But specifically, look at this 0 for 285, right? We had a ton of aggressive sellers, right? Positive delta, but we were unable to really break above this level. We only had a tiny wick above this level. And what we can see is the market, broke the previous candle's low, right? This gives us the selling confirmation. So when we go to Thursday's price action, right? What we do again, the market opens here, 9:30 Eastern. We didn't tap into this zone until probably 45 to about 50 past 9. So 20 minutes of patience. Important to understand. I think I took a trade here, but didn't manage it well. So I took a break even on a trade. I was up $600, right? So let me just break that down. So again, this is what I'm saying. So I'm saying to traders, right, here's the level from Wednesday. Now, when we come to this level, we can either hold bearish or we can hold bullish. Whether we take the bearish or the bullish trade ultimately depends on what the order flow tells us. And this is the difference between ICT and order flow, right? You need to know who's in control at your breakers in order to make it valid. So yeah, here was my execution for that day. Again, if I quickly go over the execution, what we had over here is we had price breaking the level. So here was our break, and this was a 10 a.m. Eastern, very wicky candle, not the cleanest break. But what we had is we had a ton of aggressive buyers. We can see the positive delta here, a ton of aggressive buyers inside of the level. So notice how I am looking at price action inside of the level, and my execution was here as we broke below this level here, right? Not the level, sorry, the break. Initial break, retest. Buyers failed, buyers failed, buyers failed, buyers failed. We break below here. There was my execution. 9 contracts, MES, risk just above, stop loss, sorry, just above the zone, right? And it was a good trade that was up quite a lot of money, but I gave back, right? So here's what we had. I'm not going over the trade, I'm going over your daily bias, right? That was the purpose of this video. So when I look for a daily bias, I know that I'm only going to trade off 1 or 2 levels. So this level can either hold to the downside or hold to the upside. Now, if you're lucky, you can get both, right? So I actually caught this short position over here. Again, how did I attempt the short over here? I'm going to quickly break it down. So here's what we had. So we had break below the level. So I would put my line over here. Now I'm only going to enter short when the body gets below this line, right? That's what I'm looking for. So, well, I actually entered here, which is a little bit premature. I should have waited for this. That's what you're waiting for right there. Stop loss just above the zone. And you want to target whatever you want to target, right? 1 to 1.5, 1 to 2, no matter what your risk reward is, take your profits and get out the way, right? That's the best thing you can do in these markets, right? 1 to 2 risk reward is all you need, right? What I did, I'll quickly break it down, is I saw the Asian low was not swept. So I actually targeted the Asian low like this. I went all the way down here, and guess what happened to me? I ended up taking a BE, right? I think I closed it here. Horrible trade management, but my bias was correct. And that's the main purpose I made this video. So now, if we just take a look at this, we can see here, again, Monday, buyers were in control. Tuesday, sellers were in control, right? Buyers were in control Monday, buyers were in control Tuesday, sellers become in control on Thursday. And now in the AM session, sellers remain in control as that short was in play. Right, so the daily bias isn't based off any higher time frame CRT or anything like that. It is based off how price behaves at key levels. And I can't stress that enough. I know I'm repeating myself, but that is what trading is, right? So as we can see here, so we break above this level now. So if we break above this level, it shows you that those sellers from Wednesday and those sellers from the AM session are now starting to fail. So who's in control now? Okay, buyers. Now, how do we confirm that? Right? So depending on how you traded this, now I didn't take the long, but there was a decent long here. So your bias will come down to levels. It will come down to how good you are at establishing levels and how patient you are waiting for those levels. So let's break this down now, right? Last part of the video. What we saw here was, of course, aggressive buyers failed. So here sellers were in control. So when we tap back into this zone, what we saw here is we saw horrible price action, right? But what we saw here was we saw a break above, and now look at the retest, right? Look at this retest carefully. 164 for 0. That was that 15-minute retest. We have a massive red delta, but specifically in this zone, right? Green candle, 402 for 294, 325 for 233, 218 for 195. 21 for 1, 164 for 0. That delta there, that negative delta is very, very, very telling. So this was that rejection candle, right? Look at this rejection. This rejection candle is what gave rise to a potential long you could have taken. Again, what makes this rejection candle important is the 164 for 0, right? Look at that. There. That's what creates it. So it shows you that the level is now a demand zone. So to to sum up this video, I made this video just to kind of help people with their daily bias, right? So the daily bias isn't necessarily the hardest thing to find. The hardest thing is being patient to wait for your levels and actually understanding what's happening at those levels, right? So this is something I go over a lot in Price Action Labs, right? So it's the ability to read price based on what price is doing, right? Not on what you think it's going to do. And how we do this is by establishing whether buyers are in control, whether buyers are in control, whether sellers are in control, and then we have flips. So if you're forming a daily bias, I want you to move away from things like candle range theory and all this other business. Once you have your fair value gaps, you need to define your fair value gaps with order flow and then simply use the delta footprint charts to determine whether you want to go long or whether you want to go short.